Today we are going over a trade I took just yesterday, following the exact same model I've been making videos about since the beginning of this channel. So without further ado, let's get right into it. If we go onto the 4 hour, we will see once again, just like I've explained many times, we highlight the gaps of which we want to trade off of. For example, in this case, there was a gap on the left, 4 hour right here, located on the 23rd of April, 2 o'clock. Excuse me, that's the wrong time. I had it on London because I was checking something. New York time at 9 a.m. This is a gap of which has not been disrespected multiple times, not once, not twice, 3 times, 4 times, but now the 5th time. As last time when I explained, I just simply happened to trade this time, which is the 5th time. However, if you check my last video and if you actually took notes because you wanted to learn, you'll see that these swing points happen at the times I gave you once again into the same exact gap. 5 a.m., 9 a.m., 9 a.m., 9 a.m. and then this last one was 1 a.m. to 5 a.m. which I actually traded. So saying that and explaining how the exact same starting point has occurred, we are also on the daily range inside of discount. We just reached premium and then displaced a tiny bit away, which, by the way, let me clarify that with displacement I don't literally mean a full displacement, I just mean a move away from a certain area. Anyways, let's keep it simple and move on. 4 hour gap just got hit right there. We go onto the 5 minute into that location, which happened to be London. Guess what happened? Just like the other videos, Tokyo's liquidity got swept, which would mean it's low. That's sell side liquidity, which is used to then pair up for what? Distribution towards the buy side liquidity. So once we get a displacement like this right there, this gap right here displaces through this gap right there. That's a disrespect on the 5 minute. We then anticipate moves into gaps to trade off of, which in this case, you could have traded that if you wanted to. Your stop loss would have had to been very big. It would have been safer to wait for a gap like this because it's very clean. You can just tell out of every other gap, this is the cleanest gap you could trade off of. My entry was right there at 1.07. I placed a buy right there. I put the stop loss just at 10 pips under the low. I try to do that often. And we did face a little bit of drawdown, which is normal, but then after that, price just took off and my take profit, my ultimate take profit was actually 1.3%. And I closed early because I was occupied with something else. I should have let it run. Based on my data, that target would have been simple and easy. So right now I would have been up 1.3% on a simple trade based on the exact same model that I've been teaching over the last few trades. To be completely fair and honest, the model of which I've taught you is that you target the opposing 4 hour gap or the 1 hour gap, right? In this case, the next 4 hour gap on the other side, which we've got this one at the bottom and then this one is on the other side on the direction that we are aiming for, has been disrespected multiple times. What you could have targeted, however, was buy side liquidity just here, which is this high or this high. I targeted just in between both, meaning you'd be targeting this high but also being safe enough to not go beyond and target above this one. So my take profits logic was just buy side liquidity after a displacement from a higher time frame array. And to be honest, guys, there's not much else like to talk about whenever I take these trades. Ever since the last video I made about this model, I've taken 2 losses and 2 wins. 2 of them were 0.4% losses, and then the next 2 were 0.8. So I have taken losses. Those losses were actually not because of this model. I did try and trade my plan, but the model did not show itself fully. There's not much else for me to talk about. Like, the video is quite finished, to be honest. 4 hour gap. We get displacement on the 5 minute. After having swept Tokyo's liquidity, which is used as a Judas swing. And then we have the low of the day get placed into a 4 hour gap. As I've explained many times, we get a displacement away from that low of the day, which we identify through the use of a disrespect of an opposing gap on the left, which is this one, just like the other videos. And then a retracement into a gap, typically and preferably 50% of it, which happened to be just about there, I believe, or just about there. A safe stop loss is very subjective. It's not based on numbers. Like, for example, I can't just tell you every time you take this trade, place a 10 pip stop loss. That doesn't make any sense. It's logical and safe based on the circumstances around you. Like, for example, this low over here had been taken out. So that's been used to displace away and clearly show a sign of pushing up higher. Why would price come back to that low again? My bet would have been that price is moving away from that low. So in this case, my stop loss was just under this one, which had taken out the low on the left, and it happened to be 10 pips. This was an easy 3R. As I've explained in my previous videos, these do not come by often, but they do occur. And yeah, that's pretty much it. Displacement, retracement, target, buy side liquidity. My risk got reduced to 0.25 just around this gap right here. When this gap gets created and we actually close above this high, which means we're taking out potential buy side liquidity on the 5-minute. We close with this candle, meaning we're disrespecting that buy side liquidity. And then after that, I waited a little bit more. This new gap got created, to which I placed it to break even, and then I closed around here instead of at the top. I did miss out on 0.5%, but 0.8 is still better than a 0.5 loss. That's ahead of the curve of my losses, and that's all that there really was to it. That's literally all there was. Looking at the market right now, just to give you a quick overview, we are still in discount overall when it comes to the daily range. As you can tell, we've had this swing high right there and a swing low right there, which creates the range we are currently in, because those are the most recent swing highs and swing lows. Placing the OTE tool, or the premium and discount tool, we can tell that this is premium at the top, there's a gap there on the 4-hour, and this is discount at the bottom. As I did explain in one of my videos, that although we have reached up into premium and clearly not tapped into any gaps, there might be some on the lower time frame, but let's talk about the daily and the 4-hour. Different brokers will have shown different prices, so EURUSD will have probably reached up to here, and some different broker or different price provider. In this case, in the broker that I'm using, forex.com, it has not. But I also explained this to one of the people that watch my videos. I would anticipate sells only if price reaches above 50%, which is the equilibrium point. But once we have reached there, preferably into one of these gaps, we can then anticipate a move away. A move away already happened, and ever since we reached below that point, which is again in discount, I've been looking for longs. I do not look for sells in discount. I do not look for buys in premium. Whenever I have done that in the past, it usually led to a loss because it's just pure logic. But as of at the moment, we are not inside of any specific clear gaps. I take that back. We actually are. And as I've explained in my previous videos, that a gap is a gap no matter the size. There is a gap right there on the left, which we have seen a clear move away from right here. Actually, that's a beautiful move away, and it has not been disrespected. We have hit it with this candle, and once again, guys, once again, I don't know how many times I have to repeat this before more people view my video and actually take notes and realize that I'm not doing this to get attention. I'm showing you something that repeats. I'm not promising you a 100% win rate strategy. I'm not promising you a golden ratio. I'm not promising you the holy grail. I'm promising you something that repeats. And I didn't even know that this was occurring at the moment. I've woken up 2 hours ago, but as you can tell, we've swung onto this gap on the left, 4-hour. This has happened at 1 a.m., which is currently just the start of London. And guess what's happened? The exact same thing. The exact same thing has happened, guys. Tokyo's low has been swept, disrespect through the gap, and there's a gap right here clear for an entry, which, as a matter of fact, I will take a trade on right now. At the moment, I'm just waiting for a retracement. This is the entry I'd be taking. The exact same entry, the exact same everything as the trade I just broke down, actually. The stop loss is 8.5 pips away. It's below the low, which has been placed upon the gap that we have highlighted. And it's also way beyond and under a gap on the left, the 1-hour gap. I have not placed it under this low because that's just very, very far. The RR would not be favorable. If price ended up going below this point, I would like to be out, essentially. Now we are just waiting for a retracement. The entry is clear. The trade might get missed. Trade might get filled. So a new gap is about to be created, actually. We have this one, which price is seeming to be trading away from. It's clearly not been disrespected, and that would have been a good entry at this point. I'm just going to finish up the video and say that this entry will maybe not get met. But in this case, we've had the exact same thing happen. Gap on the left. This is live, by the way. This is not replay. I've got replay here, but even if I try to use it, I can't because I don't use TradingView Pro. And within the price action right now, we've had a gap. We've had a displacement after taking Tokyo's low, a retracement to into the second gap right there, and that would have probably been a good entry. We'll find out. And the target for this, in this case, would probably be safest to be the first gap right here, which is in the 1 hour. but I would be targeting this one over here just based on the fact that we are in deep discount. I'd be targeting that gap right there, and the take profit would have been at 1 to 2, which is just under the gap to be safe. So yeah, that might work out. But yeah, going back to what I've just explained, that was the trade right there. 1 a.m. manipulation, 5 a.m. displacement or disrespect, which also offered the retracement, and a take profit, which was very easy and clear. I hope my videos have helped you learn a couple of things. I should inform you that all I use is fair value gaps. I do keep in mind other concepts and I do use other tools, but my primary go-to is gaps, and my primary go-to time frame is the 4 hour and the 5 minute. So that's it. $792 trade. Same model, same everything, nothing changed. I hope I've informed you of something. Take care.